afternoon. This is the market update for Thursday, June 27th. It was just Monday where the end of the world was here with the market. We were going to all new lows. A bear market was beginning. The end was here. The housing market is about to implode, etc., etc., etc. And here over the last 3 days, we've seen a 600-point rally. 3 straight up days. Granted, not been the easiest or most enjoyable rally, but that is pretty typical after we have the kind of sell-off that we saw last week. It usually takes a week or so for traders to grow their balls back and start to actually trade again. It also did not help that each of the last 3 days we've had the market gap up 100-plus point in the first few minutes of the day. Those kind of sessions really suck. It sucks the life out of everything because traders are unwilling to chase. Well, actually, let me correct that. Traders are unwilling to try stocks. They will chase things that are up, hoping to get out before the music stops. But starting any sort of new positions, hell no. They want to see other guys go ahead and buy it before them. And that's what we've seen over the last 3 days. 100-point gaps, pretty much a snooze fest for most of the session with all the action, first hour, last hour, and that's pretty much where we've been. You can see here on the Dow daily chart, after that nice scare everyone out bottom that we had on Monday, that we've bounced all the way back up to the 50-day and to the 20-day exponential. We've got RSI ready to break that downtrend that's been in place over the last month. You can see yet again an extreme negative MACD, and what happens over the next couple of days? Boom, market pops. It's been a very, very accurate bounce indicator on a lot of stocks and in the market really throughout 2013. Continuing driver of the market is, of course, the TLT. I cannot wait till I do not have to talk about bonds, because this correlation that everyone is focused on right now is why you see the market going on these crazy gyrations intraday. All you got to do is look at what the TLT does. A couple of days ago, we had mentioned a couple of bounce targets on the TLT. First off, 8-day moving average. We hit that today. Next, 20-day exponential. That's at 111, which was our target. You can see this really steep bullish falling wedge that's been in place for the last month. And there was news out over the entire, or the first 5 months of this year, we've seen $112 billion flow into bond funds. Crazy, but, you know, a lot of people are kind of stupid when it comes to the money. Over the last month, and we do not have the latest weekly data, $67 billion has flowed out of bond funds. So everybody rushed in all year long. Everyone sells. And you know the story, everyone sells, back up it goes. And, you know, there's been a really negative vibe. And the Fed, we've even got bearish Fed governors coming out and trying to support the market right now, because a 0.6% increase in mortgage rates over the last week has taken the Fed by surprise. There's no way that it could not have taken them by surprise, and now they're backing it off. And of course, the economic data continues to suck balls, as it has for the entire year. I mean, you know, we had GDP come out today, 1.8% downgraded. I mean, you have to laugh at the nonsense you read in the business media, especially over the last couple of days. I mean, a couple of days ago, we had the market was imploding because the economy is getting better. And then we've got articles out over the last couple of days. The market is up because we have the economy getting better. I mean, it's just whatever crap they can print that will get eyeballs for advertising. Common sense does not play into it. So you need to think for yourself when it comes to this stuff. The economy is sputtering along. We are not booming. Equals the Fed will not be raising rates for a long time, and they will continue to pump money into the market. And like I said over the weekend, this little temper tantrum that's in the market regarding bonds will be a distant memory soon enough. We'll probably see the market up 500 points before you actually see the business media say that, but you know, that's the way things are. What are we looking at going forward? Dow chart. Next week, holiday shortened week. We've got the market closed for a half day on Wednesday, full day for July 4th on Thursday. A lot of people, traders, I actually might do it myself, end up taking Friday off or go for a half day on Friday as well. So usually pretty subdued week. We could see some sloppiness given we've had this big rally. I guess it's all going to depend on what happens tomorrow. We're going to get rebuffed by this 50-day moving average on the Dow, or we're going to continue to push higher. Small caps tend to do very well on holiday shortened weeks, and the small caps, although, if we look, the Russell, very nice bounce over the last couple of days, rebalancing in the Russell tomorrow, so it could be pretty active late in the day on some of these stocks getting added to the Russell index, but we should see that start to spread out next week into some of the small micro cap stocks. What I'm thinking is it's just a matter of when we see new highs in this market. July, I'm thinking, is probably going to be a good month unless the bond market implodes, but I do not see that happening. It looks like the Fed is trying to walk back on their comments. So that's what we're looking at right now. Might be a little sloppy next week, and then off to the races for the rest of the month. Dow Transports, fat little bounce on this one, should continue in the near term. But actually, let's look at the 15-minute chart. And you can see here on the 15-minute chart, last hour of today, we saw a golden cross on the 15-minute chart. Around 15,000 is when we saw it cross. And we had the little dip that is typical after a golden cross on the 15-minute time frame. Average gain, 150 points. You recall the last one we had there about, a week and a half ago. Next day we went boom on the open, although I really don't want to see us do another 100-point gap up tomorrow, especially on a Friday. But, if we get our average 150-point gain, we've got about a 15,200 up at the top of this bearish rising wedge as a possible target into tomorrow. Oil. Well, oil got whooped like all the other commodities, although gold is continuing to take it on the chin. All those gold 5,000 guys are hiding under the rock right now as gold just implodes and it's feeding on itself right now. You recall probably late last year I was talking about how the gold market had changed, and the massive run we've seen over the last couple of years was not driven. It was driven by the ETF, GLD. The more the GLD went up, the more gold they had to buy. The higher it went up, etc., etc. The reverse is in play right now. As gold goes down, the GLD has to sell their gold, which means they pressure the price. And, it's a nasty little thing. And, it's just like Apple, how Apple could just keep going up, 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 up. What's Apple do now? Down, 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 down. So, things just move in cycles. That's the way it is. As for stock plays, not a whole lot of action. Everyone is just penny flipping right now in the market, still not believing that the worst is over. So, we probably still need to go through some of that. We've got the Russell rebalance tomorrow. APP, this is one we've played a couple of times. Last time we played it was on its last MACD cross, and the stock popped 20 cents over the course of a couple of days. Positive MACD cross again today. It's also being added to the Russell Index. Big buying volume over at the last couple of days. Got capped at 201 all day long today. All that volume came in, about 500,000 shares in the last hour. This douchebag would not let it move, and then, of course, closes it at 202. Positive MACD cross. You can see the last couple of times it has gone. Sometimes it goes really, really big, especially when it gets a candle, kind of like today. As you can see, each time it does that, we see a pop. Chart looks great. Russell edition, rock and roll, 203 break. They'll probably chase this puppy up to 217, 220, hopefully tomorrow. WYY. Nice breakout on this one today. Broke through that 84 resistance. There was a lot of chatter on Twitter about it early in the morning. Stock was flat. Then it broke out to new highs. Absolutely no chatter. And what that tells you just in this market is guys are posting on stocks. If it doesn't move immediately, they sell out. Of course, if it pops big the next day, they'll be sure to remind you that they called it and they were in. It's just that kind of market. A lot of bullshit out there. A lot of fear, a lot of it not warranted in my opinion. WYY, rumors of a big contract. Well, I guess in the earnings report, last earnings report, the CEO mentioned it. They still have not released that news. Could come at any day. The big move in the stock over the last couple of weeks suggests that news is at hand. 97 cents is a possibility on this one tomorrow. So looking very, very nice going into the session tomorrow. That's it for the video. We do not have a whole lot of active plays right now, which, is not such a bad thing. We've been playing the intraday momentum. We've got a couple of nice setups. Let's see what tomorrow brings, and let's see what next week brings. Have a great night. See you guys in the chat room tomorrow.